All right. Hello, everybody. So obviously, the biggest story on the street today was this crowd strike thing, and it's like crazy news, this and that, different opinions. But I think this is a really good example of why you're probably 98% of the time much better off ignoring the news and just listening to the charts. All right. Guess what? The stock went into a free fall. Guess where it found support? At the same price level that had been support before. All right. Back in early June, around, I guess we'll call it about 305. Let me see here. Yeah, we're going to call it 305. I mean, we're dealing with a $300 stock. We can't get too caught up in like 1 or 2 points. But anyway, there's all this news. People don't know what the hell's going on. There's like, airport delays. I couldn't even get online this morning. I don't know if it has anything to do with it. I assume it does. I was able to get online and maybe like 9:30 or 10 o'clock Eastern time. But anyway, so CrowdStrike goes into this huge sell-off. Where does it just happen to find support? All right. The same price level that was support before. It's a very common thing in markets. When they sell off, whether it's a stock or a crypto or commodity or whatever, they find support at levels that were support before. And as you can see, you know, despite today's climactic sell-off, I don't know if climactic is the right word, but anyway, where was the bottom? Well, it was right around the same bottom back here in April and early May. So why does this happen? Is it just a random coincidence? No, it's not a random coincidence. It's because there are people who sold back here who think they made a mistake. And of course, they did make a mistake when the price goes higher. And a lot of them say, all right, whatever. I got seller's remorse. If I can buy my shares back the same price I sold them at, I'm going to. So when the price got down to here after, going up for 2 or 3 months, when the price drops back to here, you get these people that were remorseful sellers over here placing buy orders, and that put a floor under it. All right. So I know it seems simple, but most people overthink the markets, especially when it comes to technical analysis. There tends to be resistance. I'm sorry. There tends to be support at levels that were support before because of this psychological thing of seller's remorse. How can you make money off of that? Well, if a market is going lower or if it's in a free fall and you're thinking you should buy it, take a look on the chart, go to the left, which means back in time, essentially. Oh, wow, look at this. This price level is important all the way back to here, back to January. Oh, look at that. It was also the peak in November of 21. Yeah, this is market memory. It just shows you how certain price levels can be important for a long time. So most traders overthink this stuff. I've been doing this for a long time. I tell my students focus on what are the important levels, what are the important trends, what's the momentum, and just think about the psychology. So if something is in a free fall or selling off and you're thinking like, gee, I want to buy it, think about this. Someone might have said, all right, you know what? CrowdStrike is in a free fall. I like the $325 level. It gets to 325. I'm going to buy it. Well, that person got run over because they guessed. The person who lets the market tell them what to do and looks in the past and lets the market tell them where the support's going to be is going to be like, oh, wow, look at that. We had support around 290 before. There's a good chance there's going to be support there again. So the moral to the story is when something is in a free fall or something is trending lower and you're thinking like, where the hell should I buy this? Look for levels that in the past had been support because there's a really good chance that they will find support there again. All right. Please check in tomorrow. There's so much to talk about in the markets, and I'll see you then.